When Chairman Powell speaks, will he give this easing of financial conditions in the last couple of months his blessing?
Hi, Jonathan. Yeah, I watched that interview. It was excellent. Look, I think he has to push back against easing financial conditions. What they need is to slow the economy down. And actually what's been happening over the last couple of months, the last couple of weeks, as the market's become a little bit more dovish, is the market has unfortunately undone a lot of the hard work that the Fed had been doing over previous months. So they need to get back in control of the situation. And that unfortunately does mean that Powell needs to play, or needs to talk, a very hawkish game next week. And hopefully that will be enough to convince markets of what they actually mean. Whether or not the market listens, I think, is a different question at this point.
On Bloomberg Radio, it's always important to understand we tell a guest by their bookcase, and with Seema Shah behind her left shoulder, she's got Ben Bernanke's The Courage to Act. What is the courage that Chairman Powell needs to act right now?
Look, he has to do two things for me to change this. One is that he has to acknowledge that the economy is slowing and it's likely to slow further. And then he has to say that despite slowing economic growth, they still have to continue raising rates. And they have to do that because containing inflation is their, really, I know they have a dual mandate, but that is the number one priority. Inflation can completely ravage an economy, and they have to get a grip of that. And I think that's what we need to hear from Powell next week, and certainly actually over the coming weeks and months as well, is to continue reiterating that message. Unfortunately, that is going to do damage to both the market and the economy.
Which asset class do you think he needs to speak most directly to, though, Seema, the bond market or the equity market, considering a lot of the rally we've seen seems to be based on the fact that yields have moved lower?
I do think that they need to talk to the equity market. Look, yields are moving lower because people are concerned about the risk of recession. And I think that the risk of recession, I mean, there is a split in a way between the equity market and the bond market. The bond market is very negative about the growth outlook, whereas the equity market seems to be very optimistic about pretty much everything. So it's really directing it at the equity market, and that is where you're getting the easing of financial conditions in the past month.
Seema, is there anything you do like in this market right now?
I do sound negative. Yes, I think that, look, the point at the moment within the economy is that inflation has peaked, but it's going to slow down very, 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 very slowly because parts of the labour market continue to be quite strong. So if inflationary pressures are still with us for some time longer, it is very important to maintain exposure to real assets. We think that real assets can continue to do well. We would focus mainly on infrastructure. Infrastructure typically outperforms in a slow growth, high inflation environment like we're entering into. And that's where, there are opportunities everywhere, but essentially it's real assets which have the best opportunities.